Good afternoon, everyone. Good morning for those of you who are here in the US. I'm Zoe Marks. I'm the faculty director of Harvard Center for African Studies, and I'm absolutely delighted to be here with you today to launch our Innovation into Impact webinar series. The Center for African Studies is Harvard's sort of gateway to Africa and Africa's gateway to Harvard. We're here to serve all of the Harvard schools and units across all disciplines and specialty areas. Our members include students, faculty, fellows, and our alumni stakeholders across the region and around the world. And today we're partnering with the Harvard Club of Nigeria to co-host a series that will be moving across the region, working with all of the Harvard alumni clubs across Africa to bring cutting edge, emerging, never before published research and expertise into conversation with some of the leading practitioners and change makers who are using this work and knowledge and idea formation on the ground to sort of chart the future for African people and countries and economies. It's my pleasure to be joined by my colleague Ntatisi Kwela, who's the director of our Africa office in Johannesburg. If any of you are ever in South Africa, we hope that you'll stop by, suggest ways that we can collaborate and continue to build bridges that are stronger and more catalytic between Harvard and the region as a whole. I'm also joined by our associate director, Rosalind Salifu, and both of them have been instrumental in supporting the organization of today's conversation, but also the technology behind the scenes. So if you have any technical difficulties, please don't be afraid to put something in the chat to ask for their help. I'd like to begin by introducing our distinguished speakers. First, let me introduce my collaborator in making this conversation possible, Professor Isabella Okabwe. She is the president of the Harvard Club of Nigeria, and beyond all of that, she's an incredibly accomplished professor and accomplished lawyer with books and articles and more to her credit. She graduated at the top of her class from the Faculty of Law at the University of Nigeria, and then continued her education with an LLM degree at the University of Lagos and another LLM at Harvard Law School, which of course is the bedrock for our connection today as the president of the Alumni Association and the Harvard Club of Nigeria. She's a member of the Nigerian Bar and was awarded the prestigious Fulbright African Senior Research Scholar Award, where she spent a further period at Harvard Law School as a Fulbright Fellow. Other honors include a Butterworth's Fellowship from the London Institute of Advanced Legal Studies and the Best Student Prize at the Faculty of Law at the University of Nigeria. In 2011, she was made an honorary fellow of the Nigerian Institute of Advanced Legal Studies. In addition to her distinguished academic career, where she worked at the Nigerian Institute of Advanced Legal Studies as professor of law and finally director of research, she has also worked with the United Nations in Somalia with UNISOM, where she was responsible for prisons, street children, and juvenile justice programs run by the UN. And she returned after the Institute to working in corporate law work. She joined the United Bank of Africa, where she held various positions, including general counsel, company secretary, and chief compliance officer. She subsequently joined Metis Capital Partners as an executive director, where she ran the day-to-day operations of the company and advised on projects with international blue chip companies in telecommunications and real estate, among others. She has since retired from Metis Capital and is the non-executive director with FSDH Capital Limited and FSDH Merchant Bank. It has been an absolute joy and honor to get to know Isabella in the past few months and to learn more about the incredible programs, engagement, and vision that the Harvard Club of Nigeria has. So to all of you who have been making that possible, thank you for being here. Thank you to Isabella for representing this broader community of excellence and alumni engagement. And to our participants, we hope that this is just the first of many opportunities for the Harvard Center for African Studies to get to know the work that you're doing, uplift the stories of impact and change that you're part of, and ideally connect you with our students for mentorship opportunities to continue the pipeline of talent and mutual exchange between Harvard and Nigeria. Our first speaker is Professor Ibehi Iyoha. I'm absolutely overjoyed that she's available this morning or this afternoon, depending on your time zone, to talk with us, because she is one of our newest sponsored researchers under the Motsepe Accelerator Program, which is funding kind of cutting edge research and innovative questions across the STEAM field. So it's STEM plus the arts. She's an assistant professor in business administration in entrepreneurial management at the Harvard Business School. She teaches the required MBA course, The Entrepreneurial Manager, the elective Launching Global Ventures, and she teaches across many of their distinguished executive education programs. Professor Iyoha is also a faculty affiliate at Harvard Center for International Development and at the Center for African Studies, and her research sits at the intersection of industrial organization and international trade, examining how interfirm networks shape productivity, innovation, and trade in both advanced and emerging economies. So her work really embodies this idea that knowledge is global and the comparisons and lessons that can be learned are not situated in one side of the world or another, but actually that there's a transnational and global dynamic that we need to understand. She combines structural and reduced form empirical methods to study questions central to firm strategy and economic policy, including how trade policy, global value chains, and emerging technologies such as AI reshape firm performance and industry dynamics. Professor Iyoha's work has received multiple awards, including the 2025 UNCTAD AIB Award for Best Research on Investment and Development, the 2025 Motsepe Presidential Research Accelerator Fund for Africa, and the 2021 Young Economists Essay Award from the European Association for Research in Industrial Economics. Her research on tariffs and trade has been featured in major media outlets, including Bloomberg, the Financial Times, the New York Times, Nikkei Asia, and Fortune. And we're lucky to have her here today to talk about some of her newest work, looking at AI in Africa and financial markets and fintech. So with that, Professor Iyoha, the floor is yours. Thank you for being here.
Thank you so much for having me. And I'm very excited for the conversation today. I'll be sharing some slides, so let me just get that on the screen. And share. Oh, DC, I think I need permission to share. I should have checked this first.
Please go ahead. I've given permission.
Okay, thank you. Okay, do you see my presentation correctly?
We're seeing the presenter view.
Okay, I am so sorry, people. Let's do that again. I'm going to share, and then I'll just share the right screen so that that's, let's do that. Okay, there we go. Okay, you see the proper view now, right?
Fantastic.
Okay, great. Well, it's a pleasure to be here and connect with you all. So this is a project that has been graciously funded by the Motsepe Foundation. And so this is hot off the presses. Actually, it's even pre-press. So I also am looking forward to questions and comments from the audience here today and from our speakers. But overall, we have this broader agenda trying to measure artificial intelligence innovation and adoption in African companies. I'm specifically thinking about how that will kind of reshape growth, convergence, and market expansion across various sectors in major African economies. So thank you so much, Zoe, for that fantastic introduction. But there are a few trends I think I want to point out that I think are just really important to set the scene for our conversation today. So I think we hear a lot about artificial intelligence in general. And the question is, why is this like so special, or why is this a remarkable technology relative to anything else, right? And one reason is that the capabilities of artificial intelligence have been increasing exponentially. So these are different kind of technologies and tasks. And you can see that, for example, image classification, the amount of time it took for AI capabilities in image classification to reach kind of like the human baseline, essentially took almost like 10 years between like 2012 and 2022. Whereas now, the amount of time it's taken to reach, PhD level science questions, they've been able to achieve that, go from 40% performance in 2023 to reaching that human baseline in 2024. So there's an exponential increase in the capabilities of this technology. And it's not just happening in software, it's also happening in hardware. So looking at the computational performance of different generations of GPUs and TPUs, we're essentially seeing that just something to note about the second graph is that it is log scaled, right? So we're essentially seeing exponential increases to the order of a factor of 1,000 between 2020 and 2024 in terms of the computational power that we've been able to achieve. The other thing that's been remarkable about artificial intelligence as a technology overall is that adoption has also been relatively rapid relative to other kind of general purpose technologies we can think of, like the internet and the computer. So this is research that was done by my colleague here and his co-authors. So my colleague who's at the Kennedy School, David Deming, he's now the dean of Harvard College, and his co-authors. And essentially what they're looking at is, what does the adoption trajectory of artificial intelligence look like relative to other technologies that have been, we've also considered similarly transformative, like the computer and the internet. And something that's been very striking is, if you look at the blue dot on this picture, you essentially see that it's above the green line and the red. So in the sense that just a few years after the technology has been made publicly available, AI has been made publicly available to the general public, the rates of adoption are on a much faster trajectory than previous technologies. And I have some hypotheses as to why. But if you think about the McKinsey survey of businesses, looking at how many organizations across the globe are using AI in at least some function in their organizations, the share that have gone from using it not at all to at least in one business function has gone from 20% in 2017 all the way to 78% by 2024. And so what I'm going to show you today is preliminary findings from a firm survey that we've actually done on businesses in Nigeria, and then some labor market data that's essentially taken from resumes, millions of resumes and CVs from across the continent that have been posted online on platforms such as LinkedIn, and then some case studies to kind of ground the ideas. But the first thing I want to show is our information that we have on what AI adoption looks like in Nigeria right now in organizations. So this is organized by the size of the company, large, medium, and small, and then micro enterprises. Micro is defined as having less than 10 employees. And essentially, we're seeing high rates of any adoption, right? So we're seeing adoption rates of about 75% in large enterprises and even 70% in small firms where they're using AI in some manner in the organization. But the intensity varies a lot. So if you look at the dark green sections of this plot, you're essentially seeing that the firms that are using AI intensively, we're only getting about 25% that are using AI in very high or high degrees within their organization. And the trajectory of how AI adoption has occurred is maybe not surprising, right? So larger enterprises have started using artificial intelligence within their organizations much earlier. Smaller enterprises are just now starting to use artificial intelligence. So some of the larger firms we've surveyed have used artificial intelligence for more than 5 years. Most of those are the ones that have used predictive analytics in some form. So when I say AI, I mean the broad spectrum of AI technologies, not just generative AI, but some of the newer adoption is particularly in the generative AI realm. And so one thing we want to think about is what is the impact on organizations so far? And the areas in which firms are using this artificial intelligence technology mostly has been in operation management and then also in getting analytics and insights. So anecdotally, people tend to use it in terms of getting information that would have been more difficult to get before. So in terms of preparing responses to RFPs when they need to prepare like a report to respond to RFP to apply for a grant or to apply for a procurement opportunity. That's an area in which there is a lot of use, especially of new generative AI technologies. And so far, most of the firms have reported the perceived significant or great perceived financial impact, primarily in the sales and profit realm, rather than in supply chain optimization or in changing their pricing strategy. Now, for our talk today, I think something just to set the scene is where is this adoption like happening by sector? And one of the really interesting things, one of the really interesting reasons why we would have a talk about AI and the financial sector specifically is that one thing you can do is we're able to use the salary information on where people are employed in Nigeria and basically classify people by whether they have AI relevant skills, like whether they're able to do TensorFlow or machine learning. And then we can look at the average salary of people with AI skills and then people without AI skills within an organization to understand the AI skill premium. And so what that tells us is where demand for AI talent is high. And the two sectors, if you look at the bottom of the figure, that have the highest AI wage premiums, which are the green bars, relative to the black bars, are digital commerce services and financial services. And so the financial service sector is particularly interesting because there are kind of two things that AI is really important for here. First is cybersecurity. The increase of access to tools like generative AI has actually increased the opportunity and ease of essentially committing lots of cyber attacks and cyber fraud, etc. And so adoption becomes necessary for the sector because you essentially need sophisticated tools to counter these kinds of attacks. But on a more positive side as well, there's a core friction in financial markets, which is this friction of asymmetric information, right? So anytime somebody wants to get access to credit, for example, we want to understand how good will they be with credit? How can we extend credit to people who are creditworthy and refuse credit to people who are not creditworthy? How can I keep my default rates low? And that's one of the areas in which in the financial services sector, these predictive analytics that have been available from these generative AI tools and other artificial intelligence technologies, being able to ingest a lot more data to predict how good and creditworthy different sectors of the economy are, has been very useful in terms of expanding credit access to even small and medium enterprises that would otherwise not have been able to access that kind of credit without collateral previously. These are just like two examples in the financial services sector, but I'm sure we'll learn about a lot more applications of the technology here. But one thing to point out here is that the competition for talent is global, right? So if you compare the wage premium attracted for AI skilled workers within Nigeria relative to the US, across the firm size distribution, being in the US attracts a much higher wage premium. Now, of course, we would probably want to drop companies like Meta from this because companies like Meta are paying people with AI talent multi-millions of dollars. But even if you exclude them, I think for the average firm, we still have significant AI wage premiums outside the continent than within. And so what that means is that the competition is really global. So what we're able to do is actually look at where the skilled talent within the continent is and what enterprises they tend to work for. So where are the companies in which they work headquartered? And it's about a third of the AI skilled talent on the continent works for organizations that are outside the continent. Now, some of this is happening domestically, where they're actually doing remote digital work, cross-border work with basically being like remote workers and sometimes being like freelancers as well. So one thing that I've done in a prior study is kind of looking at the role of financial technologies in facilitating this kind of telemigration, which is allowing African workers to stay in their countries, still contributing to the domestic economy, but being able to supply their labor internationally. And something we found in that study is that if you categorize this digitally delivered exports of services across African borders to regions outside the African continent, we've seen an increasing rise of these exports of these services over time. Nigeria is one of the top 5 economies that's a supplier of these kinds of services to the rest of the world. And something you'll notice is since 2020, that has essentially increased, taken off, partly because lots of organizations have been set up to have this kind of cross-border work arrangements. But something that's been an important friction for people who are trying to do this work is that because a lot of there's been this kind of decline in correspondent banking such that it's expensive to send money across borders, there's essentially been high cross-border transfer costs to African countries. So essentially the idea is that I might be getting paid, more than $1,000 to do work for a company in the US or in Europe, but I essentially have to either wait a long time to receive my earnings, or I have to pay high fees to get my earnings. And so one thing we were able to look at in this study was the role of fintech innovation that's built on the traditional finance sector to really facilitate these payments, make them faster and make them cheaper and make that sector more competitive so that people are able to freely send their labor across different regions, even when the standard payment rails do not exist. And so this is kind of like a friction that has existed, and financial technology innovation is improving access to international markets in terms of actually being a supplier of services to the rest of the world. And so one thing I do want to point out is that one of the barriers we want to keep in mind as we think about artificial intelligence technologies and innovation on the continent is that there are some limits to technology localization. So the first is that a lot of the off-the-shelf large language models and small language models don't support African languages. And so this recent study looked at open source models and whether they essentially support how many African languages they support, and only about 42 of the 2,000 African languages are supported. Recently, there've been a lot more effort. I think Google just also recently introduced another effort to do this, but Lelapa AI has been doing this for languages in East Africa, and Nigeria also released an atlas for Nigerian languages. And then we also have benchmarks to try to get better coverage of African languages in this technology. So I think I just wanted to set the stage to help us understand kind of the scope and scale of what's going on, both within Nigeria and also across the continent. And something I just want to say as a shout out to the audience that's here today is that for the rest of this project, we're really going to be doing a large scale survey rollout. And so some of you might end up being in our sample in the future. So I'm looking forward to the rest of the conversation today, and thank you for your time. So I believe we have the next speaker coming on, and I will stop sharing now.
Okay, so thank you, Professor Iyoha, for sharing your research findings with us. The next speaker that we have is Mr. Hakeem Mohammed. Now, Hakeem is the Executive Director of Global Markets and Institutional Banking at FSDH Merchant Bank in Nigeria, where he leads the bank's strategy across trading, investments, and institutional client solutions. He has over 2 decades of experience spanning financial markets, asset management, and investment banking, and he has been instrumental in driving innovation and growth across Nigeria's financial sector. He's a passionate advocate for technology-driven transformation, and Hakeem has focused on leveraging emerging technologies, including artificial intelligence, to deepen financial inclusion and enhance market efficiency. So over to you, Hakeem.
Okay. Thanks, Professor Okagwe, for the kind introduction. I'd also like to thank Professor Iyoha for setting the context, essentially around presenting the findings of our research into this very important topic. So next slide, please. So when I think about the potential that AI presents today, it sort of reminds me of the origin of personal computers, maybe somewhere around the mid 70s, early 80s. The days when companies like Apple, IBM, Intel, and maybe a few other players at the time, and how they changed the world. I mean, how these innovators have transformed our lives. And, artificial intelligence, plays in that field is revolutionizing. And if you look at the sort of funds that have been put into developing this technology by companies like Google, OpenAI, and co, you would see that what we're going through now is another kind of similar radical transformation, similar to what happened when personal computing, came into being. So my presentation will be more focused around, some of these areas. So we are going to be starting with, why AI matters. Then we'll try and look at some major trends that have driven AI adoption. Then we'll go specifically into the key opportunities and challenges that we're seeing in the Nigerian market. Then so sort of look at what's the future portends. So if you go to the next slide. So why does AI matter? And I'm just trying to present a few use cases of some of the things that we're seeing in the financial services industry globally, essentially around how we deliver services to clients, by improving efficiency, deepening financial inclusion, and how we're driving innovation. AI, for example, has powered rapid rise in digital lenders and microfinance institutions in markets like Nigeria, Kenya, South Africa, etc. If you think about what happened in Kenya with M-Pesa, or maybe the more recent one that we saw, what they were seeing in Nigeria, things around what Moneypoint and OPay are doing. Those examples, are just live examples. These companies rather are live examples of what can happen when you fully deploy AI. Now, what I've presented on the screen is not in any way exhaustive. I just picked a few use cases that we can use to essentially generate the conversation we're having today. For example, on customer engagement, and if I can track a little, the early days of use of chatbots, where essentially, some programmers are written some codes whereby if you type in, X, you get a reply Y. It was a bit easy, I should say, to figure out, what will happen. And maybe quite a number of us were not that patient and would abandon some of those queries because they were not that interactive. But if you just fast forward to what we're seeing today with machine learning and generative AI, you would see that it's quite difficult, sometimes to figure out if you're chatting with a bot or a human being, because those conversations are happening in a very swift manner, and data is being thrown out to you. So you go on the platform, you want to ask questions. In the past, you're about to call maybe customer service desk of a bank or something. But these days, you go there, if you chat with the bot, the kind of responses you get, they're actually mind-blowing. But as we know, AI is no longer futuristic. We're already living it. AI powers cybersecurity and fraud detection. And also, even in the institutional space, we're using it for risk and portfolio management. With AI, we now have the ability as banks, for example, to access a borrower's creditworthiness, not just through the traditional ways of checking how much does this person earn, how many dependents do they have, etc. But we're looking at alternative data. So things like mobile phone usage, social media footprints, etc. And if you think about even in the space of trading, right? AI is being used today, and we're using machine learning capability of this AI to dynamically learn, and adapt, and even come up with trading strategies in a way that is difficult to tell. So even as market conditions are changing, because you're working on real-time market data, you are able to then, easily, adapt as you go along. So to summarize, on this slide, I will say that Nigeria's financial system is at a pivotal moment. So we're seeing rapid digitization. The consumers of banking services in Nigeria are quite demanding. They're asking for innovative products. And there's also rising competitive pressures from the fintechs. So gone are the days when banks would sit and expect businesses to come to them. I remember, for example, as a young boy growing up, when I used to visit banks with my dad, and would go in there, get a tally, and would queue up for hours. These days, you probably don't even need to go to a bank to. In fact, you don't need to go to a bank to carry out banking services. I haven't been to some of my banks in years, and these are the benefits that advanced technology as well as AI is as presented. So if you move to the next slides around the macro trends that we're seeing, and that is enabling AI adoption. Now, the fact that quite a number of customers today are demanding, from their bankers or from their financial services providers, real-time information regarding whatever it is that they're doing. And in my own view, the next generation of winners in the financial services industry would be those who are actually betting on AI. These are people that are ready to take advantage of the amount of data that is being produced and consumed daily. Financial services company now need to understand their customers at maybe the very granular level, because these customers, like I mentioned earlier, are more sophisticated and they're not the most patient. So you can't really describe them as loyal customers. In the past, you find customers who for example, are not loyal to your brand and are ready to bank with you, irrespective of what it is that that is happening at that point in time. There's also intense competition, especially from the fintechs. So banks, because of the ease and the scale of what the fintechs are able to do, banks have had to also step up their game. Explosion of fintechs is now making banks, also to start to deliver in this way. Fintechs are able to deliver faster, better, and personalized customer experiences to this very demanding, client base. For some of them, they're not as regulated as we are. So you typically will then find that some of these guys are able to push products, to push services into the market faster. So banks have had to modernize their tech capabilities also in order to remain competitive. On growth of digital payments, we've seen in Nigeria, for example, instant payments exceed maybe about 10 billion transactions annually. So all of this, and for you to be able to cope with this sort of volumes, it has to be enabled by AI. So banks needs AI to analyze this huge number of transactions to help them with fraud detection, and they also need to automate onboarding and personalized services. So these days, you would be able, just by providing, for example, your BVN number, we have ability to be able to pull out customer information. And with that, it makes customer onboarding very quite easy to deal with. Then we're also seeing rising fraud and cybersecurity threats happening all around us. Unfortunately, fraudsters are also leveraging AI tools. Things like deepfakes, social engineering, etc. They're using all of this to scam people. However, cybersecurity is still a top investment driver in AI for banks, globally. There's also the issue of ethics and governance that we need to. They were still contending with. There are concerns, for example, around whether with AI, whether there are ethical issues. Do they even comply sometimes with the data regulations that I have in country? Next slide, please. So in terms of opportunities that we're seeing, from AI, I think there's a slide before this, the one on opportunities. Yes. Yeah, so in terms of opportunities that AI has provided to us, we've seen hyper-personalized banking and great customer experiences, because as banks, you are able to pull real-time information from customer with the use of AI. Customer transaction pattern, transaction history, what sort of payments they make, and that then helps us to better deliver services to our clients. There's also AI enhanced credits, as I mentioned earlier regarding credit scoring, and how AI has also helped to catapult financial inclusion. So if I think about Nigeria as an example, the introduction of agency banking has enabled financial services to be delivered to the most remote places, in Nigeria, with the POS agents who are operating in those areas, folks who have never had reason to have bank accounts are now enjoying financial services. On risk management, as I've mentioned this also earlier, risk management is also one area where we're beginning to see more use for AI. So things around real-time anomaly detection, AML, CFT monitoring, market and credit risk monitoring. These are areas that are very important. While banks are able to, or should I say financial services players are able to do this even before the advent of AI. But with AI, you are better able to cut your losses, comply more effectively with regulations that you may need to comply with, as well as improve on overall resilience and meet prudential guidelines. On operational efficiency and automation, with AI, we're streamlining KYC and customer onboarding, and quite a number of things have been automated around document processing, even reconciliations, where you're trying to reconcile ledgers, internal ledgers with some other systems. We're also optimizing workflows, as well as how we report compliance to regulators. So if you go to the next slide on challenges, but all of this also has its own challenges. In Nigeria, for example, there's poor data quality and a lot of fragmented data. Quite a number of data currently, is stored in silos, in legacy systems that may not be accessible or that may not even be built in a way that you can connect via API. So these are some of the things that we're facing, and there's also limited integration with telcos, government ID systems, credit bureaus. Although we're seeing improvements in that with the integration that we're seeing now with BVN and NIN, and all of that. Because what this helps is that it helps to reduce some of these things, and we see better access to data. As we know, one of the things that AI is helping us to do in Africa, not just Nigeria, is that we're able to bypass and leapfrog, some of these things that the other more developed markets, have been able to do. Because with AI, we're able to sort of cut off 1, 2, 3 steps and just move into the areas where we can then become more efficient. Even though there's high implementation and maintenance cost for AI infrastructure, but we're seeing quite a bit happening there. There's also the conversations around the machine learning engineering talents that are in short supply. But that is something that needs to be worked on. Staff who should use or maybe supervise AI often don't understand how it works. But there's also the fear of job displacement. So people are generally slow to buy into these projects. Then on the other side is the regulatory side, where especially for a regulated sector like banking, there's absence of clear AI regulation or framework. And this sort of leads to uncertainty around, how do you comply, the data privacy issue I mentioned earlier, as well as the governance aspect of it. We are not really sure. There's ambiguity around how AI can use customer data under the Nigerian Data Protection Regulation, for example. I mentioned earlier regarding cybersecurity and fraud risk, and how AI unfortunately harms, both sides of the equation. So Nigerian banks, and indeed all players in the finance sector, must invest in AI-powered cyber defense systems and train staff in a way that they're able to counter some of these issues come up. As we know, there's a large section of Nigerian population that currently lack formal financial rates. So making AI risk modeling a bit difficult to achieve. So as we get more people into the formal sector, a number of these things becomes better. So in terms of the future, and as we're wrapping up now, we've discussed the opportunities, the challenges that AI has posed to us. We now sort of focused on the next steps and what we need to do as an industry regulators to be able to ensure that we derive the maximum value from AI. Though for industry players, banks, fintechs, and other players, we need to build AI-ready platforms, infrastructure. We also need to develop responsible AI frameworks. Again, I mentioned that there is a breadth of talents here, and we also need to then, find a way to, to work on that, to train people, work with maybe the universities to develop engineering talents that are AI ready, that are feature ready. We also need to strengthen partnerships. Sometimes, banks may not be able to do it. If some fintech are already doing it, we can partner with them, collaborate with them to get some of these things done. And there are also, use cases of areas where we can focus on. And there are several things that AI is able to do. I listed some area on the first slide. Those may be the areas that we need to focus on around customer engagement, around credit, risk management, etc. And from a regulator perspective, we need to find ways to create, AI sandboxes that helps people to innovate, and that helps us generally to push things forward. We also need to establish model governance standards for AI, as well as find ways to share infrastructure. There's no need, every bank or every player, investing in technology when, someone has already done some of that. Thank you very much for listening. That's it, ma'am.
Thank you, Hakeem. Thank you, Hakeem, for some fascinating insights into how AI is being used and can be used in the banking and finance sectors. Our next speaker is Mr. Yinka Daramola. Yinka is the CEO of QCon, which is a technology, digital, and consulting firm. And he's a seasoned technology and business leader with years of experience spanning banking, strategy, and digital transformation. He leverages his expertise and passion for innovation to drive digital transformation across Africa, Europe, and North America, developing solutions that enhance efficiency, optimize operations, and accelerate growth. Over to you, Yinka.
Yeah, good day, everyone. I'm happy to be here. My name is Yinka Daramola. I'm the founder and CEO of QCon. QCon is a firm that deploys and consults for companies across Africa when it comes to AI. We've done a couple of work, and I think we've got enough experience to share as to why African financial systems are fast adopting AI. I would also like to talk about the key challenges being experienced. I would like to talk about the key challenges being experienced in the adoption of AI. I will also quickly talk about, we have seen a very critical role government and regulators have in the adoption. So that's the firm. Next slide, please. So let's quickly take a look at the overview of AI in the Nigerian financial system. Hakeem has spoken as to why and how the financial industry is adopting AI. Is in the area of risk management. It is redefining how risk management is done. Is it in the area of financial system development? It's a serious, sharp paradigm shift as to how Nigerian financial system is looking at how financial systems need to be developed. What would ordinarily take ages could take a few minutes. So it's huge. And how is the financial industry taking this? Okay, it could be in the area of fraud detection. It could be in the area of even infrastructure management. Okay, back in the days, the only set of people that weren't worried about their job due to automation were the IT folks. Today, most of their job is threatened by the emergence of AI. So we've seen this trend within the financial system. It's a global trend, and it's not any different in Nigeria. So what we've seen working with customers across Africa and especially Nigeria is there's rapid light adoption. I would say rapid adoption of light AI technologies, basically Gen AI to help with some menial task. Like the professor said, maybe from generating content for an email. So it is rapidly being used. We saw this, okay? And there's an increasing interest in AI investment by Nigerian financial system, small, big, medium-sized, from fintech company to tier one banks. There is a huge interest in AI investment. We've seen this in the various RFPs, the various conversations that are being held in these banks. We've seen this in a lot of webinars like this organized by banks, and their participation in webinars as well, and conversation around AI. So the interest is huge. Basically, the Nigerian financial system is not unaware of the benefits of AI and how AI can provide that advantage, competitive advantage, in a way that has never been thought about. So there is that interest. And one other thing we've seen also is that there's a huge difficulty in creating a business case for AI. I think I'll be talking about that. I think Hakeem also touched a few of that. So what are then the key challenges facing AI adoption? If on one hand, we've seen our customers have seen the huge benefits of AI to their business, from operational efficiency to financial efficiency, then why are they not really adopting the heavyweight AI, okay, the business-defining AI, the way one would have expected it? One, there are issues of data quality. So data is either not available or of extremely poor quality. So the huge investment that needs to be put into putting the data right is a stumbling block to AI adoption. Cybersecurity threats. Our customers have shown huge concern for data security, cybersecurity. Where's my data? And of course, there are regulatory and ethical concerns. It's not so clear. The regulation is not so clear as to how the financial system, financial industry should use AI and to use customer data. So we're not sure. Of course, the solutions resides on the cloud hyperscalers who are not resident in Nigeria. So there are issues of data sovereignty. So where should the data sit? What will the regulators say? Nobody is clear as to what is the position of the regulators on how to use data, on how to use AI. Of course, there is a huge talent gap. There's a huge talent gap. And I think what we've done as a firm also is to create an academy where very brilliant Nigerians can come, and within 3 months, they are ready to hit the ground running, helping organizations of all types adopt AI. So these are the key challenges. And what we've seen also is, like I mentioned earlier on, it's difficult. It's been a bit difficult for the Nigerian financial system players to create a very compelling business case. Okay, the business case, when it is produced, is hardly understood at the board level. Okay, again, it talks to skills gap across the spectrum, from the board to executive management to senior management to the lower guys there in the cadre. So what business case will sell with the lower guy is different from the kind of business case that will sell with the executive, and it's different from the kind of business case that will sell with the board. So we're seeing how companies struggle to make a business case for the kind of investment that will be needed. One other thing we saw is that critically, we've seen quite a number of solutions we built. For example, there's a financial audit system that will need hundreds or tens of junior auditors to review documents, to provide summary, and to make preliminary audit opinion for the senior auditors to take a look at. All right. I remember we built a solution for that, and it was mind blowing. All right. But initial investment was way too high for this for this company to afford. So we began to see the role of regulators and government. Okay. One, we think to fast track AI adoption and for AI adoption to deliver on its promise. The biggest promise of AI adoption that we see is that it is a very good opportunity for African firms and governments, okay, to leapfrog into what the future looks like and to bridge the gap between the West and the third world. Now, I think we have a difference of opinion because of our experience. It can happen. If it happens, it can happen really faster than anybody could probably have thought about it. But on the other hand, we think it may never happen. In fact, it may even expand the gap between the Western and our African government, African countries. So for us to be able to deliver on the promise of AI, we know the promises. It is clear. It is never in dispute. But how do we then fast track the adoption? How do we make it possible? How do we deliver on the promises of AI for the African financial system? We need government or regulators to facilitate ecosystem collaboration. Collaboration between ourselves, the producers of AI solutions, and the users of AI solutions like Hakeem and Hakeem's company, and also the regulators. So there must be collaboration. Okay, that collaboration doesn't exist today. And that collaboration is a huge challenge for facing AI adoption. The other thing we think is, of course, I think I've spoken about this, AI policies and regulations. We need it as quickly as we can. We don't even have very serious data regulation that is understood by everyone or easy to comply with. So we start from data regulation. There's one, it's just very difficult and for the ecosystem players to adopt. The second thing is, on top of data policy or data regulation is the AI regulation itself. So government needs to come in. And we think the third point I like to talk about is funding. Okay, that initial investment is so huge. It must be undertaken. The first and initial investment has to be undertaken. We have to do it. If we don't do it, we will never realize the benefits of the future benefits of AI. So how government can come in to provide some kind of funding or some kind of support for ecosystem players will go a long way in fast-tracking adoption and fast-tracking the realization of the benefits of AI. And lastly, what does the future look like? What does the future look like? The future outlook for us, the way we think about it, AI will redefine competition. We know that. That is a global trend. It is not any different in Nigeria. AI is fast redefining customer expectations. Customers are learning faster than we've ever imagined of what they should demand from their financial, from their banks and the fintech and even the regulators. So the speed at which every bank or every financial company must run can only be possible through a very rapid and fast adoption of AI. Okay, early adopters will gain significant market advantage. Just it's not any different from the way early adopters of automation and computing till today are benefiting from being early adopters. Thank you very much for listening. Thank you.
Thank you very much, Yinka, for that take on the challenges facing us in the adoption of AI. I'm going to hand over back to Professor Iyoha, to conduct a moderating panel, ask a panel discussion and a question and answer session. We just have about 10 minutes. No, we have about 15 minutes available for that. So I'll hand it over to you, Evelyn.
Thank you so much. So, and thank you, Hakeem and Yinka, for the fantastic presentations. I think since we're doing the moderated session now, we can have Hakeem and Yinka, if you could be on camera as well as we have the questions. That would be great. Okay.
And sorry, just to mention, if any of the audience have questions, please drop them in the chat.
Okay, so just to get started, I really love these presentations because I think it really went in you both went very deep into the specific context that we're operating in Nigeria right now, that the finance sector is facing. And so I think my first question for you, Hakeem, is, do you see a difference in the finance sector? So there's retail banking, for example, and then there's banking for, the non-retail sector. And do you think there are differences in how we expect to see AI deployed between those two, especially as we think about differences, for example, for asset management or financial services, not necessarily consumer facing?
Yes. So there are differences and there are also similarities. So maybe I should start with the differences, right? Obviously, the retail banks, one of the things I spoke about earlier was around how we can use AI for credit scoring, right? Things around, you would have, apart from the traditional data that you typically would require to be able to access a credit, that you would also ask for, you may also use alternative data, things like mobile phone usage, social media footprint, etc. Now, those are more retail, and those are more consumer driven. So if you a retail bank, so if I use examples in Nigeria like the typical commercial banks, they may find those very, very useful. So the fintechs who are focused on everyone, bottom of the pyramid, if you like, would find those sort of AI solutions very useful. However, if you dive into the space of wholesale banking, where for example, FXDH plays as a merchant bank, those scoring method or scoring methodology will probably not be the right kind of investment to make. However, there are other areas. There are other areas of areas that we can also deploy. So things around how, as an institution, you track risk exposures, credit exposures, market risk, stress testing, scenario planning, and all of that. Those are areas that we can use. So it's the same AI, it's the same sort of technology, we're deploying it for your own specific use. So one goes very granular into the retail space, and this other one stays at the institutional level, but they're both very useful. So those are the differences and similarities that I see.
Oh, fantastic. And for Yinka, what have some of been the best practices you've seen of organizations that have been able to really transform the way they are operating? Because I think, as you mentioned, there's one sense in which you can be using AI to, write better emails. And then there are all these opportunities, but then there are also all these barriers and challenges. So as like a concrete takeaway, what are some of the really best practices for the most successful use cases for integrating AI within organizations in the finance sector?
Yeah, okay, thank you so much. Thank you very much. I think from my experience, what we've seen, the differences between organizations that have achieved this transformation or achieving this transformation successfully and those who are not. Number one, organizations that are adopting, they are ready to experiment. So they have budget for experimentation. Number two, they have created a board level awareness. So there's a board level awareness for those organizations. So which means from top down within the organization, they've accepted that they must experiment and they must have an investment for AI adoption. And those are three critical things I think those organizations are doing better. Yeah, experimentation, there's investment, there's budget for it, and there's a board level top-down approval or awareness for AI adoption.
That's an interesting perspective you have, that actually this top-down is essential for integration. Because I mean, sometimes, here in the US, we argue a lot that bottom-up experimentation is how you're able to move faster as organizations. And so is that because of the regulated nature of the sector, or is that because of the nature of the technology itself? And I'd be curious to get both you, Yinka, and Hakeem's perspectives on this as well. So Yinka, you first.
All right. So I think it is peculiar with the financial sector in Nigeria. The tone at the top, that's what they say. The tone at the top that defines every other thing that the organization stands for and organizations will almost always implement. So if the tone comes from the top, it is much easier to push than when the tone is coming bottom up. Okay, because the tone coming from bottom up needs to get approval at the top. It is a lot more difficult if it's coming from the bottom. But if it's coming from the top, it's got the approval already. So it's just validation and getting it right that the executive and senior management will ensure. That is, as is usually the case with this kind of transformation, because it's an organizational transformation. It is not a small transformation. It is not a sector, transformation within a sector of the firm. It is a wholesome transformation of the organization. So it has to come from the top. Thank you.
And Hakeem, I saw you nodding, so you agree?
Yeah, I agree, because sometimes with AI implementation, you require a lot of investment. So the company has to be ready at the very top to take that bet, to say, okay, we need to deploy, we need to make these investments in this technology. So therefore, having access, having the buy-in from the very top helps with the implementation. While sometimes I agree also that some of these initiatives come from the bottom. These are the guys that use this on a day-to-day basis. But it's actually very important to get the buy-in of the folks at the top, at the board level, for a successful implementation. I agree.
Fantastic. I have one more, and then I know I can see a lot of questions are coming from the Q&A, so I actually want us to have time to get to all of them. So I just have one more for you both, which is, I always like to have these concrete, what can you do today as an organization to really develop a competitive edge in this new technology? And so what is your step one as an individual who is a key decision maker within an organization? What would be your step one today? So Hakeem, you first.
I think step one, if you haven't considered it before, is to have like an AI policy as an organization, something that defines how you want to play, what you want to do, and how you want to prioritize. Because again, there are several use cases. You need to then prioritize and say, this is how I intend to run it. So for example, it could be that, we want to start implementing AI. However, we want to start with those that are just internal, things that just makes us more efficient rather than customer facing, just because we want to try out the technology and be sure it works and all of that. But it's actually very important that you have something documented that then provides some guidance as to how you're going to do it. Because you also need to consider several aspects, things around data governance, things around what regulatory provisions are. So you need to so that's why in my view, you need to have that document that sort of specifies and guides what exactly it is that you're going to do.
Okay, so your step one is actually having a framework overall and developing that framework. And are there resources out there that exist for helping organizations and decision makers come up with a framework like that? Because that seems like a big ask, no?
Yes. That's where people like Yinka come in, right? Because they help organizations to, with this sort of implementation. So they guide us to how we do this. Because there are several areas. You also don't want to implement a system that then exposes you to cyber threats. But again, that's also a real thing. You also need to be sure that it's secured enough, and you're not going to, while you're trying to, adopt new technology, then expose yourself to even greater risks out there.
Yeah. And so Yinka, what would be your step one?
Well, to be honest, I think I will advise you get educated to know the risk of not adopting. Just know that you may be hitting up. Other companies will eat you up for lunch. So you've got to have the reasons to want to implement AI. And I think the next thing we always advise organizations to do, just like Hakeem said, is to have a framework. You need to be guided. And the starting point of having a framework is to have a discovery session. So you have several discovery sessions. That's where you identify what areas of business will benefit from the adoption of AI the most, and how much will it cost you to do that. Once that framework is there, it becomes easy for even the board to see the future of what they're doing and business cases can be created much faster. And yeah, that's always, yeah, thank you.
And just a quick follow-up on that. So this is something that's coming from the Q&A from Folarin Badebo Smith. I'm so sorry about mispronouncing Badebo. So Yinka, does your organization offer services to companies that are tiptoeing around AI?
Yeah, sure, we do that. We do that. We offer these consulting services for organizations of all types, specifically in the financial services area. So yeah, we do that. We do that, and we are a big partner to each of the major AI hyperscalers. So we help these AI hyperscalers from Azure, which is Microsoft, AWS, GCP, to adopt to implement. We implement for customers. Yeah. So but it goes beyond implementation. It's value realization is what is the most important thing. So we say you implement this, and this is the value you're going to realize. And we also help you monitor and evaluate how much value you've created from the adoption of AI, so that it's not just a situation of spending money and wasting money. So value realization is very important.
So just to double click on that, and actually this is for both Yinka and Hakeem, on AI ROI, this is a question from Abdullahi Mohammed. Would you say the impact has been more around cost cutting or revenue drivers as of today?
Well, I think cost cutting and revenue driving, you're talking about the same thing. You know, there are so many ways to improve your revenue. You either cost cuts and well, maybe no revenue, your profit, your margin. AI can help you drive down cost. It does that. AI can also help you drive up revenue. So I shared an experience with a firm. We developed an AI-driven audit process. Now, this customer of ours can now take more clients per unit of time. So that's revenue generation. Yeah, and we did it by reducing costs, improving the turnaround time, and even improving quality. So time, quality, and cost, and even reducing risk. So all those dimensions are important in the adoption of AI.
How about Hakeem, from what you're seeing, has this been mostly on the customer, like kind of revenue driving side, or more on the cost cutting side?
Well, I would say we're seeing it in, on the two sides of the coin, right? So one side, you're using it to drive efficiency, you're using it to track, risk and all of that. But the other side, you're also using it to drive, demand. So the platforms that are used for customer engagement, for example, or the ones that every now and then that reminds you, oh, you need to make these payments. You paid this person last month. It's that time of the month, time to pay. That's more revenue driven, right? But so we're seeing it on both sides, and depending on where you sit, both are happening, I would say, concurrently.
And one more thing about so there's a question from Martin Mbaya asking about basically comparing Nigerian market to other major African ones like South Africa and Kenya. Are we seeing very different rates of adoption relative to those markets? How would we compare them? And maybe Yinka, you have an immediate reaction, so I'll ask you first.
Yeah, honestly, I would say the AI budget by the private sector in South Africa, it's more than double the rest of Africa. Yeah, I can tell you that. So there's that is a fact that we've seen, and also the appreciation as well. If we build a solution for the Nigerian market and the Kenyan market, for example, or the Ghanaian market, and it's X dollar. Oftentimes, if you present that to a South African company, they probably think, will it work? They say, why do you think it won't work? It looks cheap. And the reason is simple. If you have put the cost based on selling in Nigeria or in Kenya, it will look so cheap to a South African firm. So that difference is there. We see that, okay? But that said, it could be that, I don't know. I haven't taken my time to find out why is that the case, but I may be able to say why that is the case, because even within automation and software, it is still the same thing. So it's not any different from AI adoption. But one thing that is different also actually is that if you compare the Nigerian market, the resources are huge. we do businesses in several countries of the world, but I can tell you, the resources in Nigeria, I'm not sure it's been discovered. I don't think it's been discovered. It is deep and huge. I brought my American partner to Nigeria to just have a walk around. He went back to the US thinking he just left Silicon Valley. Well, maybe Silicon Valley without the infrastructure, with the human infrastructure, basically. So that's what I've seen as the difference between the two markets or the various markets. Yeah.
And have you noticed any differences, Hakeem?
No, and I think Yinka has answered that question, very well. Yeah, in terms of, again, if you check the size of the economies, that's an indication as to how much money is available for spend. South African economy is way more developed, and some of these companies maybe have a better appreciation of some of these solutions, and they typically will want to put more money behind it. But like Yinka mentioned, we're seeing increasing interest in the Nigerian markets, because of how we've seen this develop in other markets.
Fantastic. Well, thank you so much. I will hand back over to our president to take us home.
Okay,
Thank you.
Thank you so much. I mean, it's been a fascinating discussion. Unfortunately, we weren't able to address all the questions, but I'm sure our speakers would not mind answering any questions that you may have after this event. For our Nigerian audience, if you get in touch with me, I can link you up. I can link you up with the speakers. When Zoe first raised the idea of an African alumni webinar series, I thought it was an excellent idea, as it would allow different alumni clubs to explore deeply relevant topics of interest both to the host country and the wider African community. The Harvard University Alumni Club of Nigeria is honored to be the first club to co-create and co-host the inaugural lecture in this webinar series. I would like to thank our faculty speaker, Professor Khwaja and Iyoha, for sharing her fascinating research findings with us, and Hakeem and Yinka for sharing their hands-on practical experiences in the field and their thoughts on how to truly transform innovation into impact. Lastly, I would like to thank the Africa Office and the Harvard University Center for African Studies for this initiative, their diligent support and hard work in ensuring the success of today's webinar. And thank you to all our attendees here present. Thank you once again, and good evening, everybody.